Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man, guru, head honcho of the hour, AJ Brown. Good morning, AJ.
Wow, with an introduction like that, who could complain? That's awesome.
Well, I get to see some things that other people don't. So I know you're working magic behind the scenes. I see the comments, I see the reviews. Uh let's dig straight into the market.
Mhm.
The sentiment for the quarter or for the year so far is, I'm scared we might be going into a recession. The market had a big pullback. This week we had a bit of a rally. What are your thoughts? Give me your perspective of things.
Yeah, you know what? Let's look at the charts because the charts are telling us a big difference. So, where did I leave you guys off last week? Well, I left you off last week, and the big thing we were saying is let's pay attention to where we find our next bottom. And the big thing that I was saying is if our bottom is below this level or even more below this level, the roughly $5,000 level or the 4,875 level, we know that this downturn has legs and is going to continue on. All these fears about recession are going to play through. We've got our death cross on the 50 crossing down below the 200 simple moving average, blah, blah, blah. But no, we got a confirmed bottom all the way up here. Now, we always identify in my rainbow analysis this halfway mark. And what's it a halfway mark? It's a halfway mark of the previous move. And that halfway mark is kind of ideal for contraction phases. Well, we actually reversed. I don't know if you guys can see it, but it's just like a few pennies, ever so slightly below that halfway mark into this red zone, which for us means sideways chop. But I mean, it's so close, it could be considered, you know, one or the other. It's kind of like a Gemini. It's one or the other. So the next thing we're looking for is where do we have our next top? So we were watching this level, $5,456.90, because that would be kind of the level that told us whether or not, we're on actually on a trend change or if we're going to be consolidating. Well, yesterday we closed above that level. And so now the question is will we wind up finding our next reversal above or below? You might want to write this down. $5,527.39, or if you're rounding, just 5,525. So we're not that far away. We're about $40 away from that. But the scoop is that'll tell us whether or not, we're going to see some more sideways chop up ahead, or if we're going to see actually a whole bunch of bargain buying leading into another rally. So we're watching that level carefully, with this move not dipping down into downtrending strategy. We actually marked a new trend change, as you can see here in my drawing. So the question is this going to be more of a sideways move, kind of like leveling off after the bear jumped out the window, or are we going to, start to see a bounce back up? So far, if you look at the bets of experienced investors, we're going to be in a period of sideways chop, and today's trading actually results in that. The scoop is again, we've talked about this. It's kind of like we have to change our analysis to less of looking at how the economy is doing and more of what is being published in the mass media and on things like X and Truth Social, X being the former Twitter. And so, Monday we were going to be firing Jerome Powell and tariffs were out of control. Tuesday, we reversed our stance. Jerome Powell's a cool guy, and we're going to pull back. We are making trade deals. Of course, on Wednesday, Thursday, and today, all those trade deals that were being talked about, all the other parties, namely India, Korea, Japan, and especially China, are like, trade deals. What trade deals? So, the market's a little bit on edge. I think the market knows that a lot of the rhetoric out there, investors know to be a little bit, what should I say, questioning of that, any sort of headline, because they know they've been burned a few times believing these headlines, and it turns out not to materialize. So I think there's still some trepidation, Sip. There's still some uncertainty, but there was a bunch of bargain buying, and it looks like it had some legs.
Yeah, and I'm almost curious, like if you pull back a little bit, because this is only roughly like a 30-day view. But if we go, maybe, for the year, like 3 months or so, the bottom forming makes a little, there's some good strong arguments for that. And I went ahead and pasted that 55.27 in the chat because,
Mhm.
like you said, that is a really critical moment or critical area. I did see, I think last week what we were talking about with the market was, okay, we're kind of light on the economic news for
Mhm.
a short period of time. The tariff stuff, trade wars is day to day, right? So we're just
Mhm.
kind of listening. But the big news was that the companies and executives at major corporations were kind of giving their perspective
Mhm.
on things. Did any of that verbiage stick out to you this week? I think Google was good, Intel was bad.
Yeah. We got a lot of forward guidance. Actually, if you actually look at all the forward guidance, it hasn't been that good. But I think, we talked a little bit last week about how some companies were taking the stance of giving a plan A and a plan B. And I think this week I heard more of that. I think that there was so much applauding by investors of having a plan A, plan B, being able to have different strategies in place depending on what happens in the world market, that I saw other companies doing that this week. In fact, I've been abstaining from earnings play this season. And in retrospect, there were quite a few good earnings plays out there. In fact, if any of our viewers did some earnings plays, I'd love for you to at least mention them in the comments, because I'd like to know what you're doing. I'm still abstaining because, man, I do not like playing uncertainty, but I have seen some results of some earnings play. In other words, yes, earnings looking behind us have been good. Forward guidance has been uncertain. They're taking the plan A, plan B stance in their forward guidance. And a lot of them have played out such that there's not so much movement in the stock price because of what was said. So investors are now taking what people are saying as okay, this is the new normal.
Yeah, and I actually saw let me pull up this chart right here. So we've had this rhetoric of trade war, trade war, trade war, but we really haven't had any data to kind of say here are the ramifications of it. But this one came out, this was posted, I don't know, 2 days ago, but this is the Richmond Manufacturing Survey
Hmm.
with the lowest orders. I mean, we're talking in almost 30 years here. And this was the first stat that caught my attention in terms of like, okay, now we're starting to see some data. And then I saw this guy on Twitter who he was tracking the containers. So he was doing the container shipments month over month and was like, look at this almost 50% drop in the shipments in the US. And I think that might take another 2 or 3 months to see the ramifications into any pricing, right? Because it's like a supply demand
Hmm.
effect. And are we actually turning to our local sources to fill the void, I guess, is the whole goal of the trade war.
I mean, the analogy is that, the US economy is a huge, huge ship, and it takes a long time to see what's happening. And you really, investor sentiment is that you really, because it takes so long, you want to move the steering wheel slowly and with um, an actual long-term goal in mind. And if you're just doing this and then the other way, um, the ship is not going to move like that on a dime. And so, that's what the Fed said. So the Fed has been on kind of a um, uh, press junket trying to save face because all last week, Trump with his huge media push was kind of painting the Fed, especially Jerome Powell, as like the reason why things are bad. And so they've been saving face, and what they've been saying is we can't even adjust our monetary policy until next half a year because we have to see what the tariffs do, right? But you're right. Just yesterday, we got the federal durable goods orders economic news. And we see for sure that people are out there buying cars because they're afraid that the price of cars are going up. So, they were expecting orders for cars to be about 1.5%. It was close to 10% in the month of March. But then you look when you factor out cars and you look at just what's left. I mean, they were expecting a little bit of growth on things like washers and dryers and other durable goods, and instead hardly any sales at all. So, yeah, I mean, people are it's as if you're creating these artificial blips in the economy with some purchases again because of these crazy tariffs on cars and things. But yeah, huge uptick in orders for cars, almost no order increases for anything else, which was below expectations. So yeah, it's having an effect. The question is can we just agree on something and move forward or what?
Yeah, the other term that I keep seeing more frequent than not is recession. A lot of the argument of, oh yeah, we're gonna have a recession. It's just a matter of how much of a recession, right?
Hmm.
And so I guess to our viewers who are online with us here, um, this is kind of, I saw in your notes, this is kind of we might be just kind of in a range for a while. We might not
Hmm.
hit those highs that we've hit last year for
Hmm.
quite some time. We might not go too much lower while we figure this out. And is this a good time to start to use options as a
Oh yeah.
way, right? Like I have some money, I've had some stocks, I've pulled some out. It's just sitting there. What are my options, right? I mean, what are my financial options? I guess you could do some treasury, some lower yield stuff, but with the options, that you teach in your course and in the program, a lot of the examples are like 2 or 3 week positions, right?
Yeah. Yeah, yeah, yeah. 2 or 3 week positions, but then they reoccur because what we're doing is we're adjusting our main position that we place on with these like ticking time bombs, is what I call them, or these expiring coupons. And basically, you do an adjustment trade and then it expires 2 to 3 weeks later, pays its dividend to you, and then you do it again and you do it again. So, using what we call theta decay, or using the fact that options expire, their value wastes away with time. Using that as a primary mechanism, time is not going to change for us, right? A week is still going to be a week, a month is still going to be a month. That's a very reliable profit mechanism. And so that's working, right? That is one method of profiting on the market that's working. when, things are uncertain and things are just in a sideways choppy move. So that's it. And your thing about recession, yes, I know that there's all these technical, this is what a recession is, if we but in reality, recessions are in people's minds, just like everything. If there's enough people out there who are consumers, especially consumer sentiment says it's a recession, that's like the chicken and egg. That's going to get the ball rolling. So, if 33%, I think that's the number I read in a report earlier this week, 33% of people think that they're already in a recession. If that grows, it's going to happen.
Yeah, and a recession could be something as simple as, hey, I don't want to spend on things that I used to spend on, or I'm going to kind of pull back on some things. I'm not going to take that trip. And, I guess there's versions of that that are more severe than that, right? Like the
Yeah.
COVID, for example, was like breaks, everything's halted. We don't know what the hell is going on.
Hmm.
Sentiment can be very poor. I think currently it may be very industry based, but it's having an overall effect. Like the good thing about our economy is because we're self-inflicting this, we might be able to like get ourselves out. But the question is how long? How long is that going to take? It's going to be a 4-year process with the current administration? I don't know. But that's what we're here for, right? We're here to follow along, but also find the opportunities to take advantage, and to profit and to keep the coupons paying, keep the growth moving along. All right, so in terms of AJ's premium selling program and some of the nuances of it, we've got a quick links page for you. So this has got all the goodies of AJ's free indicator, which you'll see on the chart as we go through some examples. We've got all our socials, and then head on over to this, register for a free workshop. This is that premium selling course where AJ breaks down this strategy for taking some of the money that you might have on the sidelines and using it and creating a system where you can collect payments almost like a paycheck. So we've been getting great feedback on that for the last couple of years, but this is a daily workshop, and AJ you do have current examples in there, so it is timely. You're not going to be watching something from a couple years ago. We've got AJ.
Guys, the reason why I like options and why I trade options, and I don't day trade options. I'm an end of day trader. I only, look at the markets in the evenings. The reason why I like options so much is because you can take any pattern, whether the markets are going up or down or sideways, right? Which is what we look like we're going to be entering in for the next foreseeable future. And you can find a way to profit on it. You can profit on, the fear or confidence in the market. You can profit like I do, mostly on just time passing by. So if you like to make like great rewards on time passing by, that's what I was attracted to, was the fact that no matter what the market's doing, I can reach into my tool chest of all these different strategies and find the one that fits what's happening and make a go of it. I don't have to wait, or I don't have to do anything risky. So if you're into that, check out that workshop.
Yeah, and if you're hesitant on the sidelines because you think it might be too confusing, you might be surprised how advanced some of these trading systems and platforms are now. I know I'm a big Robinhood guy, and they've made it very, very easy to understand options, puts, calls, your risk, reward, and then applying the things that you might learn, in AJ's, webinar into action. And then if you're looking for some support, we've got a one-on-one coaching program and an entire trading trainer community where like-minded individuals such as yourself and many of our members who've been with us for, I mean, AJ, what's like the oldest member that you have in there checking in on your Thursday calls? Like it's got to be like 10 plus years.
Oh yeah, we've got folks that have been trading with us since 2006, 2005.
So they're still showing up, finding opportunities, communicating. So all this good stuff is in AJ's quick links page. Uh, quick reminder, we are broadcasting live, and you know, our calendar is a little light. So if you out there in the ecosphere have some questions, have some positions that you would like AJ to run through, feel free to throw them in the chat. Otherwise, we're going to take a short break. We'll come back and we'll talk about some ways to make money in a choppy market, right? Let's, you know, I'm interested in some strategies that we might be able to execute on that. So sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. We did get a little inquiry if we want to run into that right off the bat. I believe GT is Goodyear tire.
Yeah. I love Goodyear tire. Goodyear tire, not only is this a great symbol with respect to its price, meaning it's pretty affordable, right? Oops, let me go ahead and bring that back up. Not only is it pretty affordable, but it's got a great option chain. So we can trade options against it, all sorts of different strategies. Goodyear tire right now is approaching its high of $11. It also has an earnings announcement coming up next. I don't think it's next week. I think it's 2 weeks from now. It's May 5th. What does that say? It says after market close. I don't think you want to do an earnings trade on Goodyear tire. I would wait until Goodyear tire is past its earnings date. But in the meantime, look at how Goodyear tire is sideways choppy, trading between about $8.25 and $11. And it's quite, cyclical, meaning every other month it's at the top, every other month it's at the bottom. Most typical traders would look at this and say, this is a crap trade to do. You're not going to make any money on it. But with options, we can most assuredly trade this for premium. So what you wind up doing is setting up what I call an initial covering position. This position then allows us to buy and sell options against it without having any sort of ramifications, with risk, right? You have a covering, it covers you just in case something goes against you. And then you just cyclically sell the options, usually every expiration date. And Goodyear tire is perfect for that. I would wait until, the earnings date has passed. And then it looks like you're in a position where you want to buy some initial puts. So if you have access, and you can get free access to our options lookup tool, it'll give you access to our web portal, and you come over here and you visit the options lookup tool, either under trading tools or under AJ's stash, and you put in Goodyear tire. And here's the little trick for finding substitute options. You want to look at all the options, and you want to look at price components. And so once you've got this up, I'll zoom in for you here a little bit. You'll go out at least 8 months if you're going to look for a good long-term substitute. Right now, we're looking probably at the January 2026 option. And if you're looking on the put side, that's this one over here, this half of the chart over here. If you're looking on the put side, what you want to do is go far enough in the money and then look at the bid ask spread. Make sure it's not too far. Right now, I'm looking at this one that has a 4.9% premium. Anywhere 5% or less is good. And then I'm looking at the difference between the bid and the ask. It's only 60 cents. That's not bad for a substitute option. So we already, just in a couple of keystrokes, found which option we should buy as our initial covering position. It's the Goodyear January $16 put. You buy these things for about $5.30 a share or $530 a contract, and you're set to sell put premium moving forward. Every month on the month, you could be selling your put premium, making in this case, probably making double-digit returns every month on your initial investment. So, it makes it really simple. Um, and Goodyear Tire is a great symbol to do that against.
Agreed. I love those $10 ish names that are heavy with volume so that you can really, have the flexibility to make it work for you. So
Goodyear
thank you.
Tire has been on my watch list for almost 25 years. Great symbol in order to sell premium on and do other sort of trading strategies on, but especially to turn into one of those income producers for you. So
Yeah,
I'm glad you brought that up, Neil.
that could be an interesting earnings call too, seeing as they're kind of a
Almost
prov-
a defensive
supp-
play, wouldn't you say?
yes. I mean, it really depends on where they get their raw materials, right? Like if they're
Yeah.
sourced local.
Also, I don't think demand for tires is going anywhere anytime soon.
No. All right. So AJ, let's just, say I'm having a conversation with one of my newer investor friends, which I was doing recently during Easter. And, I'm giving them the rundown that, hey, things aren't that bad, things aren't that good. We might be in this, middle channel for quite some time. Uh what would your advice be from a options perspective? Where is the lowest amount of risk? Is it in the uncertainty portion of it? Is it in the time portion? How would I give them some advice on getting or protecting themselves in, for the next, I don't know, 2 quarters or so?
Yeah. Well, I mean, that's exactly what I would say. First of all, I'd say, remember, even though people are always talking about losing money in the markets doesn't actually lose people money. Markets are just a place for money to change hands. And so you got to figure out how to put yourself on the winning side of that. And so I would then point to the fact that when things are uncertain and things are moving sideways, people are buying these derivatives as a sort of insurance policy, a hedge. And so if people are buying them and paying top dollar for them, where should you position yourself to make money? As the seller, right? And so that's what I was just, in fact, that's what I was telling Neil about Goodyear Tire. Set up the initial covering position that allows you to basically be a seller of these protective, hedging instruments, these protective options that people are using as insurance. Set yourself up, get that initial covering position, and then go into business selling that insurance. And the insurance expires. And when the insurance expires, people buy more. And so then you sell the next month and the next month. And that's really how you position yourself to profit when uncertainty is high and price action is sideways.
And I guess the part that I always get a little confused with when explaining is the initial position, right? And
Mhm.
so, in order to be a insurance writer, you
You need
almost
to have
need
an
a
initial.
version of collateral, and that collateral can be the stock, right? 100 shares of Goodyear at 10, or another insurance contract. And I think that's where people get a little bit thrown off. It's like, okay, I'm going to buy an insurance contract and then I'm going to sell an insurance contract, and the difference is going to be my profit.
Yeah, exactly. And so it's kind of like starting a business, Sip. It's kind of like you have to invest in the initial, kind of business, the initial thing that's going to allow you to do this. And then once you have that, you can then sell your premium. And so you wind up paying off the business as you go along, right? And that's the profit on it, right? So if you pay $10, $8 a share for something, and then you start selling premium at it, um that's how you make 10% here, 10% there, 10% there. Sometimes, I mean, it's not often, but sometimes you get to the point where you pay off your whole business, and then but other times you just wind up selling it and you take the profit and run.
Yeah, and that strategy that we described is more of a basic explanation, but there's how many, 27, 29
Mhm.
variations, and I think
27 is where the 27 different variations of using options to profit on anything that's happening in the market. If you think that a stock is in a consolidation pattern and it's going to, break out, but you're not sure if it's going to break out up or down, there's a strategy for that. If you think the otherwise, that it's going to stay within a pattern for a while, there's a strategy for that. If you think it's going up, you can leverage up. If you think it's going down, you can leverage down. If you think that you want to profit on people who are getting more and more, uh, unconfident, more frustrated, and they're buying more insurance, you can profit on that. If you think people are, all of a sudden have that phew, relief, you can profit on that. You can profit on just about any pattern that's showing up in a symbol or even in a sector.
Yeah, and I think that that's also where people might get a little bit scared with the goofy condor, reverse condor.
Yeah, you don't have to make it that complicated. And the other thing is people for some reason they mess up, or they think that if you're trading options, you're also a day trader, which I got to tell you, I have never been attracted to day trading. Number one, because I've seen people burn out in months from doing it. It's just a lot happening during the day, but also I really, really value my days. I would rather come on here with you guys every Friday than be sitting in front of the markets, watching it. So I do my stuff in the evening. And especially with the latest technology, when I say the latest technology, I'm talking about 8 years worth of automatic trading. You could just program your trade bots every evening, and it only takes a couple of seconds. And then you just let them run during the day while you have the day off. And I really am attracted to that. So options trading does not equal day trading, right? And that's what I really want people to understand. Options trading is, using certain investment vehicles in order to profit on pretty much any pattern that's shown. Day trading means you're trading in and out during the day. Two separate things. Don't confluent them together.
Yeah, and the team, the trading trainer team in the back end has really been making some strides and some innovations on some of
Oh
these
yeah.
concepts that you described, and we're going to be rolling out some really cool stuff in the next couple of weeks. So head on over to that Get Access link, sign up, join the free, go to the free indicator suite. There's some good freebies in there. And as
Yeah,
we evolve,
everything we do, we give out free while we're, so if you want to be, in on the scoop and get to play with it before it's released, as a official product, you should totally come and play with all of our free tools. Everything that I'm thinking up goes out and everybody can have access to it. And that's how we kind of figure out what's working, what's not. So you should come into our little experimentation playground and realize that these tools are just making folks, money hand left and right, despite, the markets and the talking heads telling us that everybody's losing money. I did so well in this last, 3 months of downturn. Uh, I pretty much made, 3 or 4 typical American incomes in just the last 3 months.
yeah, maybe even just on that one VIX trade that we've,
We love
reviewed.
the VIX trade. The VIX trade, I even had the VIX chart up when we started this call. The VIX trade is starting to reload, especially as we're getting the VIX down below that $26 mark. The founded unfounded fear threshold is what I've labeled it. The founded unfounded fear threshold. That just rolls off your tongue. But it's getting ready to kind of recalibrate for us to do it again. So everybody should have their eyeballs peeled for that one too.
Yeah, I was while you were talking earlier, I saw it break the 26, and I was like, "Oh, it's hitting that threshold." If you want to see the breakdown of the previous versions of the VIX trade, just head on over to the YouTube,
Hmm.
search VIX on our page, and there should be a couple of videos, if not more, from the previous years. Because, like you described in those videos, this is something that you continuously reload on, because no one's ever going to be 100% confident about about the world, right? There's always
It's
going to be some
absolutely true.
pessimism, and this is a good way to take advantage of that.
It's how
Uh,
humans are wired, man.
yeah, and just that fluctuation, right? Like that 26 threshold is prior to all the trade war stuff. So, it's a very interesting level to keep an eye on.
Our premium trades for you guys out there that are trading trainer devotees, this uh this unfounded threshold between these two numbers, $26 and $12, this is where our premium selling trading works the best. So the fact that we're coming back down into this, and you can see, it's not often that we have to jump into other trading strategies. Most of the time we're in that unfounded fear threshold zone where we just make lots and lots of money basically selling insurance.
With very realistic risk parameters so that you're never overextending yourself and putting yourself in a situation to lose more than you have, just so that everyone's clear. AJ, from what I've seen in the business, is very, very risk conscious. And so it's one of the very first lessons in any of the programs is, you're not going to get rich overnight. And that's okay, right? That's
That's
okay.
okay. That's
Sometimes
right.
it takes some time. You don't want to, you want to be able to sleep well at night. All right. So I saw your pick of the week this week, and it's a name that's been in it being floated all week because I believe they came out with earnings, but also factors of the trade war, some layoffs. So let's take our discussion on the ways to utilize options and apply it to your pick of the week, which I think most of our viewers should know of, is Intel, ticker symbol INTC. Was this an earnings play? Did earnings affect your strategy? Were you in it before? Let's go ahead and break it down.
So Intel is actually one I've been watching closely, and so have my program participants. Actually, as a group, we looked at Intel very heavily last week, and we're all like poised on it. And what we've been waiting for was an earnings announcement because we didn't want to be taken off guard. And actually, yes, the earnings announcement, Intel didn't impress anybody, but the stock price didn't suffer too much, and it's actually setting my program participants and me, and now you guys who watch our YouTube show, up for a good entry. So we actually got our follow through. If I put my indicators, and anybody can go download these indicators if you want, but I'm going to put mine on right now. You can see that we got kind of a signal on April 22nd. That was the beginning of this week. We got a signal, and this was an end of day signal, Tuesday of this week, end of day signal. So Wednesday and Thursday, we were looking at an entry, but at the same time, we were also holding on to our reins because we wanted to see what happened to earnings. So yes, we got our follow through right before earnings. Earnings kind of kicked us down a little bit, but that gives us a new opportunity to buy at a lower price. We just want to make sure that after earnings that we basically have a double bottom. The idea is when we set up this initial covering position, in this case, we're either going to buy some stock or there is a good substitute option out there. Instead of buying the stock, you could buy the Intel January 2026 $15 call. I know for those of you that are out there with me, you're going to look at the $15 call and say, man, that has a lot of premium to it. But I really want to value the liquidity of the option. And that one also has a lot of, it's always a compromise between how deep in the money you go and how liquid the option is. So I found my compromise at the $15 calls, and I think that's a great substitute. I wouldn't just throw that out and say I'm going to buy stock. I would buy the $15 call, and I'm just waiting for a little bit of follow through to make sure that we're going to be on our way up. But the idea is we want to buy that initial covering position at as low a price as we can so that when we do sell premium moving forward, we get the biggest bang for our buck. So that's where we're at, SIP. We're looking for the best opportunity. We've got earnings now behind us. It wasn't that big of a deal. We just want to make sure that the signal that we saw on Tuesday starts to get the follow through again. We're looking to buy when the underlying stock is somewhere between about 20, 21, maybe at the most $22. And we're going to probably use that substitute option. And then we're set. We've got that initial covering position in place, and we're ready to sell that insurance premium in the future that expires every 3 to 5 weeks. And because that fear, unfounded fear, we're below that, a lot of people are going to be buying insurance from us and then never using it. And that's the whole idea. That's, if you think about it, that's the whole idea of every insurance, business in it. And that's why insurance business is so profitable, because people will pay for something that expires in a certain amount of time, that they want to have the comfort and feeling that if they needed it, they could use it, but most people never use it. That's exactly where we're setting ourselves up with Intel. That's why it's my pick of the week.
So basically, I am going into the market and I'm buying an insurance contract, which is called a call. That's priced at $15, and then that's my entry. That's my fee to go into business on this opportunity.
And
And
notice
then
that I'm buying that $15 option. Um, and this $15 option's pretty deep in the money. It's not like, we're currently trading up around $21, $22. Or actually, we're currently trading at $20. We've been up as high as $21. So notice it's very deep in the money, SIP. And it's also not going to expire until January. So it's less of this one that I'm buying, and is less of an insurance, right? Because when people buy insurance, they usually buy it for like 3 or 4 weeks. They don't buy it for 8 months. And it's so deep in the money. This is more like a substitute for buying the stock.
and then I'm turning around, and then I'm
Yes.
going to sell the premium or the insurance contract for a shorter duration, right?
3
Like
to 5 weeks.
3 to 5 weeks. And then, like you said, if nothing happens, it expires, but you still have that initial covering position on,
People
right? So
still
then,
paid me for the ability to have a nice, for them to own that insurance for 3 to 5 weeks. It gives them peace of mind, but the truth is especially with the VIX coming back down below that fear line of 26, the likelihood that they're actually going to use it, it's just them paying me for the peace of mind, to have the ability to use it. But the truth is most of them don't use it, and that's what we do. That's
and
that's
then,
what we do.
and then, so if it expires, you still own the call, right? And could you
Yeah,
just turn around and sell another premium while
that's
you're
right.
holding that
That
initial?
that initial option substitute call option, right? Or if I buy the stock, that's just as good. That allows me to continue to sell these insurance contracts month in and month out, all the way up through January of next year.
All right. Well, you're liking Intel. Intel's got a nice price range, probably very reasonable cost of doing business for the cost of some of those initial positions, at least compared to, some of the 100 plus, priced stocks, the $100 plus.
Let's
But
look at
yeah,
the option that I was talking about. If you don't want to, so Intel, my little tool here updates every evening. So yesterday when Intel closed, it was at $21.49, and I'm talking about buying this guy down here, the $15 call, right? So instead of spending $21, you're spending something like $7.90, right? Per share, or $793 for a contract, which is 100 shares of these things. So it's totally affordable, right? And so, like I said, the insurance contracts are the ones that expire about every 3 to 5 weeks. So the next one for the monthly is May 16th. The weeklies, as you can see, expire every Friday. These are the ones that people buy for insurance these are the ones that we want to go ahead and sell. And they usually buy the at the money ones. So we sell the at the money ones. So I bought that thing for $793 and then I'm selling one for $111. So you get it, right? I invest $793 and then I make $111. And at the end of the 5 weeks, that one expires and I go in and do it again. Every month I sell something for $111 so long as I have that initial 793, in the bank. I started the business with a $793 and then every month I'm making 111, something like that. I mean, I'm just throwing out the specific numbers we found for today, but that's the process.
Yeah, and then if you do get that option, like if that insurance contract does get executed, you've made the money on that initial position to kind of offset it, which
Yeah.
makes it a beautiful strategy, to keep rotating in and out of.
Right. So if they decide that they do want to use their insurance, and we find that when the market's right, like it is now, that happens about once every 5 months. So you sell insurance, you sell insurance, you sell insurance. Maybe around the fifth month, somebody finally says, I think I'm going to use that insurance. When they use that insurance, they wind up, they wind up giving you $21.50. Well, you are in it for $15. So even when you get exercised, you wind up, making the 21.50 and then paying off your guy for 15. You wind up walking away with an additional $6.50 on the back end anyway, or $650 in the when you do a contract, 100 shares. So there's even money on the back end when you do actually get called out of your insurance policy. And this works with the put options too. So you can do it both ways.
Yeah, and that's where maybe it may become a little bit more confusing because you're essentially doing the opposite of this and hoping that the stock price goes down, but the concepts kind of are the same with the spreads and
Premium
whatnot.
is premium is premium.
Yeah. All right, cool. AJ's pick of the week, Intel. There you go. Wonderful breakdown. If anyone follows through or executes on this, please keep us posted. Let us know. We'd love to hear a success story. But we do have a couple names in our speed round, AJ. We've got about 10 minutes left to run through them. So let's see if we can find some opportunities from our lovely viewers all around the world. Okay, starting on the East Coast, Sean from New York, New York wants to know what's happening in Citigroup, ticker symbol C, a nice little financial play.
I'm glad. So Citigroup was part of that group of banks that gave their earnings last week. This probably would have been a really good earnings play if you weren't a scaredy cat like I am. But now it looks like Citigroup is on its way up. It's a little bit on the more pricier side than what we've been talking about with Goodyear Tire and Intel. Citigroup is trading at about $68. Let's take a look using my options lookup tool to see if there's some sort of substitute we might want to buy. It's as easy as Citigroup is giving us some interesting data here. So maybe I can bounce into the tool, our backup tool here. Let's take a look. All right, let's go out to January 2026. We don't have to go that far out. Let's see how deep we go. Maybe, I mean, there's so much liquidity on these things. Maybe we go, I mean, heck, you could maybe go with that's a little bit high. Maybe this $40. So the $40 is trading somewhere around $29 right now. So instead of investing $68, we can get a really nice substitute for $29. This is the January 2026 $40 call. So if you want to trade a substitute on this, you could do that option. And sure, we got a bottom signal. It's not really sideways choppy, but if you get that initial covering position in place and you start to trade up, that initial covering position is actually quite directional. It'll profit really beautifully. And then I would say if it starts to reverse on you lower than $84, sell some call premium. That's what I would do. If it goes above $84 and starts to go towards the ceiling, then instead of selling premium, I would just look at where's my exit signal. I'd use a trailing stop or a technical stop, something like that, in order to just sell that initial covering position for as much profit as I can. So I've got a little bit of choice here. All to say, I think this is a great time to be getting into Citibank. You can either buy the stock or, like I said, that $40 call that doesn't expire until January of 2026 would be a great substitute, and then see how it plays out. Again, if it reverses below $85, sell premium. If it goes higher than $85, then look for an exit. That's a great little hybrid trade.
Yeah, and I'm curious how dif- separated from the rest of the economy, the financial sectors might be, because they're not so dependent on transactions. I don't really know the answer, but
I think they are quite tied into the economy, but I think you've got some banks that are too big to fail, like Citibank is huge, Citigroup. So I think you're in a pretty good place with Citigroup.
All right, thanks for that, Sean. Moving on to our second name, Carl in Lincoln, Nebraska. Wants to know if we have any opportunities in Cheesecake Factory, ticker symbol
Oh,
CAKE. Probably a big, uh, I guess, it's going to be impacted by, people not spending money as much because it's one of these, fancier restaurants, I
it's
guess you might
so
call it.
interesting. I'm going to go on a tangent for a second. This current administration that's doing our fiscal policy or dictating our fiscal policy through executive order is so focused on making widgets and stuff, whether it be raw materials or things. But especially the US economy is over 60-70%, depending on, how you evaluate it, services, right? Restaurants, doing your house cleaning, doing your laundry, services. And it's funny how they've kind of forgotten all about whether, and even services like, hey, we're going to go pick your crops out in your field. So with that said, Cheesecake Factory has some earnings coming up on April 30th. I don't know, Carl, if you're thinking about doing an earnings trade. Cheesecake Factory has been hit or miss with, a traditional horizontal spread for earnings plays. And so I'm not sure I could give you any guidance on that. When in doubt, you could trade a straddle or strangle on that. But as far as premium selling, um, of course, I'd wait for earnings to come and go so that doesn't throw any wrenches in my works, because with premium selling, you don't want anything unexpected. You want to buy your initial covering position, and then you just want to be in the business of selling insurance. But it looks like Cheesecake is coming towards a line of resistance around here at $52. So after earnings is passed, if I get one of my magenta arrows hinting that there's a confirmed top, I might consider, either shorting Cheesecake Factory or buying a substitute put option so that I would make money on any movement of Cheesecake going down. And then whether I short the stock or buy that substitute put option, I'm now in the business of selling puts as my insurance policy. And so if I start to come back down and I find a floor where I found it in the past around this $45 mark, I'll sell put insurance to those people who want to buy it. And it's just like selling the call insurance. it's insurance and people will pay you a premium and most likely it'll expire for them worthless and you keep the insurance premium and you do it again and again. So that's where I'm at. I'd let insurance earnings come and go. I'd set up my initial covering position, which in this case is either shorting the stock or even better, buying a substitute put option. Pick one that's far out in time, like January 2026, deep in the money. Remember, with put options, in the money means higher in strike price, not lower in strike price. And then I'm ready to be in the put selling business. So I like that idea with Cake. Let some time go by, let that earnings pass, and then make some decisions after that.
Yeah, I can imagine their earnings call being very informative for, you know,
A whole
everyday
sector.
consumers. Yeah.
Yeah.
All right. Thank you for that, Carl. Moving on to our third and final name. Beth in Dallas, Texas wants to know Darling Ingredients, DAR. I believe we covered this not too long ago.
Yeah. Yeah. We like these folks. Often, Darling Ingredients is going to be one of those companies that they stay in business no matter what. They're a profitable company. They're dealing in, well, ingredients. So we're at a bottom. When's this earnings? Earnings is April 24th. So that was yesterday. That was before market open. Hardly any volatility at all because of the earnings. I see maybe yesterday, prices opened lower based on earnings and then closed exactly where it did before, even though that. So it turned out to be a little bit of a nothing burger. Listen, I could see buying some Darling Ingredients as kind of a placeholder again, whether it be the stock or whether it be a substitute option, if there is a good one. I would buy that. And then if the price goes up higher, and I've seen that it's gone up, I think I'm too close here. Let me look at just the last year. I could see it going back up to like 40, 42 bucks in the next couple of months. And when you do that, sell your call premium. And if it goes even higher, then consider just, selling the position. Here's another great hybrid trade. And it's ready to go. I see that we found a bottom. It's like a double bottom here. I could see loading up on some Darling Ingredients. I think that's a great idea, Beth.
Yeah, and in one of the previous episodes, I feel like we dug into more of why it could weather the storm,
Yeah.
and how we've looked at it in the past. So maybe go check that out. But Beth,
Darling is a darling.
you might have a good one there. All right, heading into the weekend, it looks like the markets are feeling optimistic. We're getting some uptick here. The VIX, it just hit 2531. So we're a little bit happier on a Friday than we have been the past 2 or 3 weeks. But looking at we're still in that little
Anything can change.
teetering zone there. So I think that's kind of what we're heading into the weekend looking at. AJ, anything else on your radar?
Yeah, no, we barely got into the red zone here. We're in the red zone here. If we keep staying, and once we find our top reversal, we'll have a mature trend because we'll have 2 tests of support, 2 tests of resistance. If we keep sticking in the red zones, this is a premium seller's heaven. This is what we like. Everybody else hates it. All the other traders hate it. All the other investors hate it because there's no movement up or down. But for us, this is where having your clock ticking down and you just sell insurance policies that expire every 3 to 5 weeks, this is where we can make our dollars. So I'm looking forward to it.
Yeah. And if anyone watching wants to hop on the bandwagon, start executing some of these concepts for yourself, head on over to our Quick Links page, hit the free indicator, join the program, check out the workshop. A lot of goodies here for you to play with. Otherwise, did you watch the NFL draft today? I mean, this is why I'm rocking my Bears here because, it's every year for some reason I'm just like fascinated by the draft. So like I'm very into it. So that was yesterday. And that's going to be my weekend. Anything happening for you?
Yeah, no, we're just enjoying. We actually have finally the most beautiful spring weather. My wife had put the outdoor dinner table on the deck. We opened up the backyard pool, so it's time for us to just enjoy the weekend. So that's what we're doing.
Yeah, I feel like just it may be a peaceful weekend in America. We're not over dramatizing things heading into the end of Friday,
No,
but
I think almost having, JD Vance meet the Pope and then the Pope dying and having all the cameras moving over to the Pope instead of to our president was a good thing this week.
well, R.I.P. to Pope Francis.
Yeah.
I know some, my parents were very saddened by the news,
Oh,
but
yeah.
but
He was kind of he created a little bit of, because the Catholic Church is typically very conservative, and he was a little bit more on the liberal side. But I kind of like that for the Catholic Church, and we'll see who gets picked next. It'll be an interesting thing.
I mean, he was 80 something, so he definitely lived a fulfilling life and left his mark on the world.
He
So
did. He was a
so
good
that
dude.
you know, a- a- as the world turns, we'll continue to report and find ways to profit using the wonderful tools of options.
The other
AJ,
guy's still alive. The guy that he replaced, he's like 95, 96. The one that was kind of a Nazi.
well, he can just enjoy his 90s in
Yeah.
peace on some seminary in Italy.
Yeah. He's somewhere.
All right, AJ, thank you for your time. Thank you, everybody, for tuning in. Please show some love. Hit that like, hit that follow, hit that subscribe button. If you have any questions, leave it in the comments. Send us a DM. Head on over to the website. Hit the support. You can reach out to the team there. Otherwise, have a wonderful weekend, everybody. Stay safe, and we'll see you next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.